Okay, this is the guide to Fibonacci, which is my absolute favorite technical analysis tool. So when you're looking at the market, you're looking for a strong directional move, or you're looking for a point of interest, an overextended move, as I call them. So I guess the first thing is just make your charts look a little bit tidier. Just put the candlesticks on. Then what you're trying to do, from this particular view, you've got the hourly here, is just figure out what the market's trying to achieve. So we can see the market's moved down. So there's been a something of significance happen here. This is the Aussie dollar, so that'll be to do with the rate decision in Australia probably. So what you're looking for is what's happened in the past and how you can use that to predict the future. So what I would say is that the most realistic way of looking at what's going to happen in the future is knowing that the market in the kind of short term has been going down. So look for the last lowest high point to figure out where the market's going to go, find some value and retrace back to. So what we see is the market here, low point, high point. So what the idea of Fibonacci is, if we don't make a new low or a new high, that 8% of the time a kind of strong directional move based upon the overall trend is going to retrace to 50%. So that 50% would be our target and our pivot. So what we'd look to is to be getting short, while the market doesn't break this high and then break through 23.6, get to that 50%, maybe, some consolidation, continue to break down through 61.8, and then you get your expansion points. So you think for the full move of the market, it's going to get down to, maybe below 67. So this kind of, it's a quick way of just trying to interpret what the market's doing now. You've got to look at the overall picture, so maybe look back at the dailies, and again, the market's been moving down. Now we're talking about the Aussie dollar, we're talking about the Australian government and central banks cutting rates. It seems to be a race to zero with New Zealand, something they've got quite a bit of experience in. And, Australia have talked about quantitative easing. They've talked about, kind of all these different measures. You have to understand that, down under, it's all about property. Wages aren't particularly great. So a lot of people make money out of property. So by reducing the interest rate, the borrowing costs, that's buoying up the price of property. And that's fine by everybody. Again, we all know the implications of low interest rates and quantitative easing. It pushes asset prices up. So that's an easy double win for the existing people that have already bought property over in Australia. So that my idea that kind of with seeing the market move down and not really recover in the short term, you'd be looking for highs to sell, and that kind of fits in. So you can look back at your 15-minute charts. And your 5-minute charts, the Fibonacci is still going to remain pretty much the same, but you're going to see an easier breaking point. So I mean that's really in a nutshell how Fibonacci works from that perspective. If you want to look for a more longer term, trend, obviously go back on the higher time frames. If you want to kind of look for a more short term move, again, maybe on the 5-minute charts, you draw a Fibonacci on the kind of last instance of where you saw kind of something be injected into the market, which is here. So again, that 50% has acted as a natural point where the market comes back to the 51 and the 61.8 are kind of pivot points. So you'd expect if the market can't go higher, it's going to break down. So that's like fibs within fibs, using the 5-minute and the hourly fib just to give you those points of attraction. Because what you don't want to fall into the the trap is of just basically trying to sell and hold all the way down here. If the market's going to do this, and it's going to move like this, then you want to kind of be selling high, buying it back. So you've got opportunities, to set reasonable stops, and, get in, get out, get in, get out, get in, get out, and and you're selling all the way down the range. That's how trading's done. That's how you make money. And obviously, the easier way to use Fibonacci's, if you don't have the confidence to select the high and low, and you can't, find the passages in my book, making much sense to you, then, you just come and use my charts, and then, like magic, here we have, the Fibonacci's drawn onto your charts, and these adapt to every different time frame. So right now, we're above value, in the 15 minutes. So the market's trying desperately to get back below these expansion points and, to the 50% and start its move down. And these are the targets it's going to get to. So again, every time frame, it'll redraw on the hourly. We're actually below that 50%. So that's a good indication that on your 15-minute charts, that's where you want to be entering the trades. You're still finding good value and selling it and getting in and out quicker, because again, it's not about being right, it's about being right at the right time. So that's what those views will give you. And again, I mean, it's just looking back to any product when it's all set out correctly. You have your daily, hourly, 15-minute, and 5-minute, and all your kind of your 50% pivots are shown to you on the different time frames, and you can start to see where value is based upon just that purely that one kind of Fibonacci that will look through every time frame and every product and draw it exactly how you need to see it. When you start tying up with other indicators, that's when it becomes much more powerful. So get a free copy of iView charts when you open an account, a live account with Black Bull. All the links are on my site. Just go to steveruffley.com. You want to speak to me again, just get me on Twitter. That's where I kind of hang out, on Skype, Steve Ruffley. And again, a lot of the stuff I talk about in Fibonacci will feature in and has featured in my book, The Rough Guide to Trading. So just Google that on Amazon, or you can get it directly from the publisher on Harriman House. All right. Well, hope you enjoyed that. I'm going to do a lot more kind of quick fire, instances of the technical analysis that I use and that's made me successful.